Alright everyone, let me just make sure that my illustrating tool is working before I continue any further. I just actually sat down and pushed record, speaking for a little bit, then I flicked on over into my Snagit tool here, or at least my illustrative tool, and it wasn't working, so I stopped it, deleted it, and here we are again. Thanks for joining me. It is at the close on Thursday afternoon. Another pretty tremendous session worth of trade. The S&P 500 closing up over 6%. Have a look in the top right-hand corner of my screen. We closed up a further 154 points. I just wanted to make the distinction, right? What a big change that we have seen off from where we were on Friday of last week, even continuing into Monday's session, whereby again we saw these markets jump, push, continue to the downside. However, that handbrake has been pulled. And since Tuesday onwards, I know it's only 3 sessions through to the close on Thursday, we have seen a complete 180-degree U-turn in the US financial market indices. It is now, again, moving back into the leading market indices globally speaking, whereby on the back of a very relaxed, right, Federal Reserve, and of course, with these fiscal stimulus measures, which have now been approved by Congress, right, we're seeing the market's response. That response is very nice to see. It's very welcomed. It is a change of scenery right from, of course, that turning point all the way back at the midpoint of February. Really, since that point and all the way through to the close on Monday of the Monday just gone, it's been quite dire. However, I just wanted to point out, as at this Thursday afternoon market close, that we are starting to see, right, potentially a major change come into the markets. It's very interesting to point out how very quickly things can change, and this has really changed in the space of 4 trading sessions through to this Thursday afternoon market recap. I'm going to go out onto the monthly chart for you, because if I told you what this candlestick would have looked like for the month of March as little as 2 weeks ago, you would have told me I was absolutely crazy. I'm looking at this and sort of kicking myself. This is really quite phenomenal. I mean, very rarely do you see something like this. But I just wanted to point this out to you. Pay attention to these O, H, and L figures up here. Close not so much. Obviously, we're looking at Thursday when I hover my mouse over this, or through to the trading session today. But if you have a look at the intra-session or the intra-monthly low, 2,191 points. Let me just illustrate that on the chart for you. Again, I'll hover my mouse over it. 2,191 points. We are closing up here at 2,630 points at the moment. So we have seen a massive move, right? It goes without saying, a massive multi-week to some extent. Now, it started to slow down last week. We were talking about how there was a lot of overhang or overlapping of the candlesticks. It was the first time we'd actually seen this since the beginning of the waterfall sell-off. But really, over the past 4 sessions, we've not only seen the S&P rocket to the upside, but this also extends to the Russell 2000, the transportational average, not to mention the industrial average, and also the NASDAQ as well. I've been waiting for something to speak about. Here it is right here. This is something quite phenomenal, as I just alluded to a little bit earlier, to actually be referencing at this point for a number of reasons. Obviously, you have been following me along in the actual public YouTube updates that I bring to you, and you understand that at this particular time, just how important, if you go all the way back to 2009, just how important this third decelerating fan line is for the overall markets. It was only as recently as a week ago whereby I was sitting down and we were having a very brutal, a very honest, bit of a sobering conversation, whereby the S&P 500, again, it was a lot lower, and it was looking as though on the monthly time frame we were going to see that definitive close below not only this third decelerating fan line, which has been in effect since 2009, but really more importantly, it was looking as though we were going to definitively take out and close below roughly this figure down here at 2,465, which extends all the way back to, right, the December lows of the calendar year 2018, prior to what has been, right, that bullish run all the way through to the top in February of 2020. So if my maths is right, I believe we've got Friday to move through, we've got Monday and Tuesday, and that's going to round out the true month of actual March until we move into April. So we still have another 3 sessions to actually move on this candlestick here. But as it stands, I'm just going to point out a couple of things. This was looking a lot more negative and serious, obviously, than what it was, or as it's closing today, only as little as a week ago. We are not obviously down here at 2,200 anymore, nor are we actually below the swing low, again going back to December of 2018. And if you really want to get molecular on this, again, understanding that we still have another 3 sessions of trade left in the month of March, you can see that we're pretty much back on this trend line. I don't want to discount or take away from any of the points that I brought up over Saturday most recently in that pro analysis class. I wanted to just let you know that I believe that thesis is still somewhat true at this particular point. But we don't necessarily need to gravitate right into one of those 2 options at this particular time. That is the beauty of somewhat sitting on the sidelines and allowing this market to really reveal itself at this particular time. A lot of volatility still persists. It's very rare to see the market up, 10%, over 10% on Tuesday, what they call turnaround Tuesday, then to actually see it up a further 6% on a Thursday. I mean, if you start looking at this, some of the intra-session movements that we're seeing, I mean, this market might be up very close to right at the end of trade on Friday up over 20%. And I know it's going to look really good off from these lows, but you just generally don't see those types of trading behaviors or environments all that much. So the S&P 500, it's taking off. It's back above, more or less, you could conclude, with 3 sessions still to go in the month of March, pretty much above this decelerating fan line. A lot of volume coming into this month's candlestick. Again, we still have a few more sessions left until we get that. But to me, that looks like as though really we've got pretty much, you could say, double the average monthly volume that you would expect in the market. So again, a lot of people are jumping back on in to actually support and purchase this market down around those depressed and very low prices, which is quite interesting. If I go out into the weekly chart, this really surmises it for you. You can just see this outside weekly candlestick. This is what we call an engulfing candle. And we have been speaking about the state of these markets being as oversold as what they are. And the reality is that on the daily time frame, I mean, we really haven't adjusted all that much. What we have done, however, and we've been speaking about this, is keeping an eye on the MACD. More importantly, and specifically on the weekly chart, however, we've just seen that definitive cross on the daily. You've got the stochastics coming out of extreme oversold territory. Again, we haven't been this oversold, especially on the RSI, since the depths of the 2009, right, GFC into the period of March, whereby that was where we saw the definitive shakeout bottom. And since then, of course, we've been working with these decelerating fan lines as this bullish trend has continued. But if you look at that on the S&P 500, they're starting to shift on the daily. Also, it looks as though the momentum, I know this lags a little bit and we still have Friday session to move through, but there is a fair chance that this is going to be that extreme, right, histogram print to the downside on the MACD. The RSI is adjusting. This is now on the weekly time frame. The Stokes, right, it's pretty much at the midpoint. It'll be interesting to actually see this turn up and base off from that midpoint if it chooses to do so. Now, going back into this on the weekly time frame, you can see that we are up 325 points on the S&P 500. Take a look at this on the Dow Jones, right, 3,378. We're back above the primary bullish trend line again. So you need to give this a little bit of leeway. And I thought, look, last week that all the leeway was given to the markets and they were telling us and suggesting that, look, this is it. However, instead of sort of putting a fork through it at this point in terms of the market itself, I think we still need to be, or at least have an open mind in regard to this market, because very rarely do you see things like this happen to push them back above the primary bull trend. And maybe this is going to be some form of a shakeout to the downside, and that we are going to move back into a sort of a longer synchronicity with some of those economic foundations that we're looking at, or the economic data points that we're going to look at. Of course, we're going to see some extreme abnormalities in the readings of those signals probably over the next 3 to 4 months, but we're just going to have to monitor them and move with the market. We've got our projected areas as to where we're looking to sell, or at least where we expect, if the market is going to make that turn, as to where that's going to be up at higher prices. I don't want to discount that whatsoever, but all I wanted to really comment on at this particular point is that really Tuesday through to the close on Thursday has seen a tremendous turnaround in the state of the US financial market indices. I think it's something that you can all get on board with. I don't think really the sort of the backdrop of this whole pandemic at the moment has really shifted, or at least it's warranted as much, obviously, as to what's being picked up in the actual price action. But again, my sort of expectation is that we've probably got 2 months at most to actually move through this, or the worst of this pandemic, most likely globally speaking. But maybe the markets essentially are already bringing that and discounting that price action, or bringing that sort of that expectation forward, and it's already started to be sort of priced into the market moving forward as well. So it's very interesting. You show this on the Dow Jones Industrial Average. You've got that outside day weekly candlestick on the Nasdaq, which is very important. Again, you've got sort of this tweezer bottom. It's again, it's still technically speaking that of an engulfing pattern. But if I show you this as well on the Nasdaq, you can see that we're holding up off from this accelerated trend line as well. So it was looking as though we were breaking down below it. We've seen a very quick reversal. The market is stabilizing with a lot of this sort of fiscal stimulus and also the flooding of liquidity by the Fed. I mean, to a factor of, pretty much 1 through 4 QEs into the 5th now. Right, or at least on aggregate, 5 being bigger than the previous 4. I mean, we're seeing things that we've never really, been priced in or at least been printed in terms of modern monetary policy theory. I mean, it's really quite incredible. The markets themselves, like junkies, right, they're just taking off on the news. So again, it's still largely unstable to some extent. We've got those upper targets that we're going to be looking at, but boy, it's nice to actually finally be speaking about these markets more constructively and to see that maybe there is still a little bit of life in these markets as we were talking about, right? Going back into the entire outlook of 2021 or even 2021, the calendar years of something like this happening. This is pretty much confirmed at this point that we are going to move back up into these upper ranges. Whether or not this creates a left ahead and a right shoulder, time will tell. You can see that pattern taking place on the S&P 500. You can also see that taking place on the Dow Jones Industrial Average. You've got the left shoulder, the head, the right shoulder potentially over here. The Nasdaq, right? Similar sort of scenario. It's somewhat discounted now, given, of course, the monthly chart and just to see this long lower wick. But we're going to have to just move with this information as it continues to play out. I don't think we're through the worst of it, but this pattern here, it's constantly changing. None more so than what's taken place over the past 4 sessions, or this week, through to the close on Thursday. A lot of these individual stocks are rocking and rolling as well. I'm pretty happy just to be watching this and just giving the benefit of the doubt to the market at this particular point and watching it around those critical backtest areas to see whether we do, right, get a substantial, right, reaction in terms of supply with prices moving back down, and whether or not we are going to see sustainable, right, continuation of this market bounce into, right, or further into 2020. Now, having a look at the Russell 2000, you can see here on the monthly chart, we're still down 300 points, an absolute bloodbath. But when I bring it up on the weekly, we're up 166. Again, you can see this tweezer bottom. The reason I'm showing you this is because X marks the spot. This is essentially the back test of, again, this decelerating fan line. You can see 1, 2, 3, and 4. Number 4 has been your best friend. We're actually below it, obviously. So generally what happens is when you break the 4th decelerating fan line, the market itself is largely already moving sideways. That's pretty much what we have here if you think about price action. Largely moving sideways. And generally what happens is once you break the 4th, you get the back test of that decelerating fan line. And that locks into, of course, this magnetic colored line here, which has been the line in the sand of these markets for quite some time. So you're really starting to see, right, that confluence of support, which is sort of tying in very much with the S&P, with that right shoulder, so to speak, the Dow Jones as well, and to a lesser extent, the Nasdaq. So you're starting to see some patterns shared or at least synchronized across a couple of these markets. I don't want to discount it or put it all into, I should say, or at least sort of lay it all on one market itself. What we're doing is we're just taking a spread. Transportational average making that U-turn. This looks like a Japanese rounding bottom, right? Much like a couple of the other markets that we've looked at as well. If I go out into the monthly chart, again, you can see that long lower wick, right? Just down here. So we're pushing back on up. We've still got a long way to go, but X marks the spot around 9,750 as well. Quite a distance to go, so to speak, but it's really nice to see some of these movements, especially on the closely followed markets, the S&P 500, most importantly, coming back up into, or at least holding above that 3rd decelerating trend line. Also on the back of very heavy volume as well, which is indicating, right, a lot of buyer pressure down and below this trend line. So see how the next 3 days plays out. I know it's an odd number through to Tuesday. I believe that's the final session of trade. If I hover my mouse over here, it should actually confirm that. Tuesday, the 31st of March, we'll get that monthly print. But a lot to speak about in this weekend's class as at Saturday, in terms of those historical lows back to December being taken out, albeit briefly, but now holding back above it, and what it means for this trend moving forward, right? Whether or not we can actually get back on up above this long term. Okay, but at least something more constructive, right? And something more positive to be speaking about in the face of what has been a rather tumultuous period for the markets as a whole since the high in February. All right, so that's going to do us. Enjoy your Thursday evening, everyone. If you have any questions, email me. Otherwise, jump into that pro analysis class, and I'll see you on Saturday. All the best, everyone. It's James signing off. Farewell.